and welcome to Smart Fit Credit Repair. In today's video, we're going to talk about why your credit score is crucial when you're applying for a mortgage. First, let's define what a credit score is. A credit score is a numerical representation of your creditworthiness. It ranges from 300 to 850, with higher scores indicating better creditworthiness. Lenders use credit scores to determine how risky it is to lend you money. The higher your credit score, the more likely you are to be approved for a loan and receive favorable terms, such as lower interest rates. When you apply for a mortgage, your credit score is one of the most important factors that lenders consider. In fact, it's often the first thing they look at. A good credit score can help you qualify for a mortgage, while a poor credit score can make it much harder to get approved. Why is this? Well, when you apply for a mortgage, you're asking the lender to give you a large sum of money that you'll pay back over a long period of time, often 15 or 30 years. This is a significant risk for the lender, so they want to make sure that you're a responsible borrower who will make your payments on time and in full. Your credit score is a good indicator of how responsible you are with credit. If you have a high credit score, it shows that you've managed credit well in the past and are likely to continue doing so in the future. This makes you a lower-risk borrower, which can lead to lower interest rates and better loan terms. On the other hand, if you have a low credit score, it suggests that you've had trouble managing credit in the past and may be a riskier borrower. This can lead to higher interest rates, larger down payments, and stricter lending requirements. So, what can you do to improve your chances of getting approved for a mortgage? The first step is to check your credit score and credit report. You can get a free copy of your credit report once a year from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion. Look for any errors or inaccuracies and dispute them if necessary. Next, work on improving your credit score. This may involve paying down debt, making all your payments on time, and avoiding new credit inquiries or applications. It may take time to see improvement, but it's worth the effort if it means getting approved for a mortgage with better terms. In conclusion, your credit score is incredibly important when you're applying for a mortgage. It can determine whether you're approved or denied, and it can also affect the interest rate and loan terms you receive. By understanding the importance of your credit score and taking steps to improve it, you can increase your chances of getting approved for a mortgage and achieving your homeownership goals.